Hello and welcome to the FinTech Newscast. My name's John, and this week we'll be talking about some big ideas. No startups or funding rounds in this episode. We'll be talking about North Korea and why you should not be helping them with their blockchain efforts. How banks are using data to make more money than they already do on your information. And something we haven't talked about, but is a big part of the financial world, are credit unions. They're bigger and perhaps badder than ever. Please hit subscribe to keep up with these and the latest in FinTech news. All right, some big ideas this week. And someone with some big thoughts is Steve.
Medium-sized thoughts. Hey, John. I see you.
Oh, don't be so modest. So what's going on with this North Korean? This guy got busted for just talking about blockchain, huh?
Yeah, this just happened. I believe it happened just around Thanksgiving. So this is kind of a very recent story. So this guy, Virgil Griffith, who is sort of a hacker activist and actually works for the Ethereum Foundation.
Hacktivist, okay.
A hacktivist, sure. He works for the Ethereum Foundation, resides in Singapore, but is a U.S. citizen by birth and by passport. Was arrested late last week as he was coming into LAX and charged with 36 counts of helping a renegade regime try to bypass U.S. sanctions.
So he gave a talk in North Korea, I saw. So what was how did he get up to 36 violations?
Yeah, this is pretty interesting. So he has been, of course, as I mentioned, very involved in the Ethereum world with the foundation and also sort of evangelizing the power of Ethereum to change the world via smart contracts. And what happened is that going against the law, he actually traveled to Pyongyang late last year and gave a talk at a conference where he
he didn't have a visa to go to North Korea?
He did. He apparently got a visa through through the North Korean mission to the UN in New York City, and then traveled through China to kind of avoid the detection there in a way that some people go to Cuba by going to Cancun. But he traveled to Pyongyang and gave a talk, again, sort of highlighting how cryptocurrencies, especially Ethereum and its smart contracts, can be used to bypass UN sanctions and also operate beyond the purview of the U.S.-dominated global banking system. As you can imagine, the U.S. did not love this idea very much. So the result is that the Southern District of New York, our favorite district court, slapped this guy with 36 counts.
They're always on top of everybody. They
are
financial cop of the world.
They are. Well, arguably all the transactions go through New York, right? So it makes sense for them to be involved with basically everything.
So he violated sanctions. He traveled there illegally. He's helping a rogue nation on so many blacklists get around their sanctions. And so, and I guess, what did he think was okay about this? And he's not going to fly. He's going to fly into LAX with.
That's a great question.
There's going to be no problem. Maybe Singapore. I thought maybe they nabbed him outside of the U.S.
No. He was nabbed in the U.S., but I think he's in Singapore for probably tax reasons, right?
He's so smart. He flew right into LAX after doing this.
Yeah.
Right into the waiting arms of the feds.
That's right.
I don't know exactly who, FBI or.
It's probably the FBI. That would make sense. Isn't that also the same thing that the guy who co-founded Facebook also pulled, where he's now a citizen of Singapore, not the U.S., Eduardo Saverin, maybe?
Yeah, right. A Brazilian background.
Right.
And now in Singapore via the U.S.
Right, mostly for, again, tax purposes. But yeah, this guy, and he did it very in the open. He basically said, you can use things like Bitcoin and Ethereum and your own national cryptocurrency to conduct transactions and evade the long arm of the U.S. law.
Maybe ditch your U.S. citizenship before you do that, and because you're subject to even more violations, right?
You would be, yeah. So he's charged with 36 counts of violating international sanctions. I'm not sure what each of the counts are. We can go through the document in detail, although we won't. But yeah, just don't help a stated enemy of the U.S. Bolster their cryptocurrency efforts. Rule number one.
And remember, like a free, open world with no borders is still like a goal. It's not. You're still going to have problems with national borders and enforcement.
Yeah,
you're talking about a blockchain that's international and it's open, but maybe he needed to get grounded back in reality.
Exactly. This reminds me of two things that happened sort of in the near past. One is the I don't know if he was arrested, but he was charged. The guy who committed suicide, who was a co-founder of Reddit, because he was trying to release academic papers for free, and then he was charged and kind of put under a lot of pressure and eventually ended up killing himself. And the other is the famous dictum from the 90s that information wants to be free. So this is kind of a nice throwback to those two things in my mind.
All right. Well, you have to be careful with dealing with rogue nations and also your local bank branches.
Not my bank.
Also, yeah. Yeah. So there's a great article in the New York Times that goes into how banks are trying to look at ways to monetize all that data they have on you. Google and Facebook, nobody bats an eye when they're tracking you to make money and sell it to marketing companies and target ads to you, and kind of nudge you in a way. Not in a way, but basically predicting and then nudging your behavior based on the ads and the type of articles you see. I mean, obviously, that's been a much discussed thing on Facebook.
Yeah, I mean, that's basically what this professor from Harvard, Shoshana Zuboff, I think is her name, has called the age of surveillance capitalism. It's all based on data. Yeah, it's an amazing book, by the way. Read it. But yeah.
Oh, great. Yeah, I'll check that out. And banks have access to key information that these tech companies have always wanted to get a hold of and try to partner and kind of gotten a little bit burned on. But banks are thinking about how to make money from that. That private, personal information of yours has been limited to things like fraud protection.
Yep.
Based on your if you're out. Typically if you're out of the area. I think both my bank card and my American Express stopped working while I was out of town for a few days.
This is why you should create a travel plan whenever you travel. Yeah.
So that was almost embarrassing.
Yeah. Actually, those systems are based on a rule that if you conduct any card-present transactions, so any swipe of your card, beyond 100 miles from your home zip code, they go under additional scrutiny. So it's pretty interesting. Where if you travel like from one coast to the other, your transaction may be declined unless you create a travel plan.
Every stop along your cross-country trip, huh?
Exactly. Sorry, sir, card declined.
Yeah. So the bank's looking, obviously they make money from the processing fees, and now they could make money going forward. They're looking at ways to make money from giving you offers as well. So let's say you're going to go to Chipotle, in like the example in this article.
Yum.
And then they can kind of give you an offer right before 10% off at Little Caesars nearby. So then they'll get money from that offer, and then when you use the card at the place as well. A lot of these customized retail offers for this is for individual customers are already being offered from some of the large banks. They mentioned Chase, Wells Fargo, Bank of America, as well as some smaller banks. But unlike Google or Facebook, which they have to kind of guess at your behavior a little bit more, but banks have your actual
transaction data
behavior, your actual purchases. So they don't know necessarily exactly what you bought somewhere, but they say, well, if you go to a liquor store, it's probably not $60 worth of chips or something like that. So they can kind of infer what you buy, and then they can use that. And there's there's a whole industry around processing, analyzing, and offering up the results to people who want to sell those offers. And so the banks, there's like a broker in between the bank and the firms that want to sell ads.
So the idea now is to have a more direct relationship between, say, your bank and your transaction data and the company trying to sell you or sell you crap via ads, basically.
Yeah, and there's never been that kind of connection. And now that's starting to happen more and more. It's funny the way they mention it is like, a bank used to be like your priest or your psychiatrist. There was like a sacred
or your lawyer.
Financial data. People, and of course with all the bank problems historically, they wanted to give that impression. These are very, personal, kind of like a Swiss bank account kind of idea more in the past.
We should mention that this is only for banks. Actually, this same sort of concept doesn't apply to, say, MasterCard or Visa. I know for a fact that you can actually buy MasterCard transaction data, quote unquote, anonymized, so that you can see whether you can actually tie displaying an ad to somebody with them actually buying the thing that you're trying to sell them. And this has been the case in the industry for a number of years now. I just said now it looks like the actual banks that hold the deposits are the ones that are trying to make money off that data.
Right. Yeah. Not the vendors or
the payment processor or the acquirer or yeah. So Cardlytics and Audio, what do they do?
So they're the ones that kind of broker this information out to people like the fast food companies or whoever that wants to sell ads. And right now, in some of the apps, you have to go through and look for the offers, but they're looking at ways to make it more explicit, where it pops up like a notification on your phone. So banks might go from this sacred privacy duty to just being like every other vendor or tech company or department store that's looking at your behavior and giving you offers. So there's some things they can do where, like, if you buy a plane ticket to wherever, New York, they can start giving you offers to rental cars, hotels, and restaurants in that location because they know your plane ticket information.
Which actually seems like a fairly natural use case to go after. It's if we know you're going to travel, again, you get a rental car, please use your card and get 3 times whatever cashback or whatever. So it makes sense from a bank's perspective.
Right, exactly. And he said most people don't mind when it's kind of relevant to, the better the ad is, the less people seem to mind, because it seems to, I guess they see the convenience part of it and not the loss of privacy.
Yep.
But, banks may go, the concern obviously is that banks may go from being this trusted reservoir of your data, your finances, your history, all this private information. If you've spent money at a strip club in Vegas, it doesn't stay in Vegas anymore. It's now you're like, oh, honey, why are you getting all these ads for strip clubs now and near us? What's going on with that?
So
and it might they mention kind of increase our worst instincts. So if you go to a fast food place one time, now you start kind of getting all these fast food ads and kind of encouraging you to eat badly. Or if you had a vaping device, now you get all these vape offers and kind of encourages you to have kind of like these negative behaviors, not like the positive things like we talk about in PFMs, like save money and do positive things. This could be to the highest bidder to, usually the bad habits are more profitable.
They're much more profitable, yeah.
And they're worth advertising more, apparently.
But
they
lose
the customer's trust, and if banks kind of overstep into affecting your behavior, and they're not seen as a safe lockbox of your money and your information.
So to kind of push back on this, my bank recently rolled out this Cardlytics things as well, where they can surface.
So you're part of the problem, is what you're saying.
I'm part of the problem, yeah. So the bank where I have my money basically rolled this out, and I only see information that's I have to be in a logged in session, and I see the vendors and the merchant funded rewards that they offer as well. So it's not actually being sold to a third party to selling more crap. It's just based on where I've spent money. Would you like to save money at these other merchants? And it's things like Pandora or Five Guys or whatever, things that I frequent.
Yeah. I think it's just like we're getting closer and closer to the edge. And now are we going to go over into these, all these pop-up ads and everything on your banking app or in your website or in the, even in the mail or whatever, because whatever form that they sell it to.
So is this more a way for them to sell your transaction data to kind of help ad tech companies build a more robust profile of John or Steve?
And that's very valuable. So
it's
the banks
valuable,
see that
that's the case, yeah.
The banks see that money, and how long can they resist seeing that money on the table and then not taking advantage of it? This is all so new that banks haven't really had a chance to inform their customers properly and disclose everything. So you always have an opt-out option on marketing materials.
Yep.
But if you don't even know what they're doing yet and don't understand that this is already starting to happen, you don't know that you can be opting out, a third layer deep in some app or something.
And by the way, they essentially, I saw an article this week in the Times, because it was Black Friday, about how you can opt out of privacy violating companies' rules.
Yeah.
And they listed Visa, Chase, and B of A as having the worst policies.
There you go.
Visa will definitely use your data to start selling you insurance, or at least sell your name and your credit score rating so that you can get all those annoying mailers, the snail mail mailers in your inbox at home, in your mailbox. So it's not like it's a brand new process. It's been going on for a long time now.
Yeah,
but now I think
yeah.
there's a lot of more emphasis on how do we reduce this, or how do I opt out of it. So
I think the tech companies have kind of taught them,
they have
shown them
yeah.
the potential of this
Yeah.
kind of, and increased the value of it, because now you can sell it for much more with these kind of efficient tying ads to people.
You do, and in my case, I actually opted out of Visa's marketing whatever platform last week, but I had to put in my Visa credit card number and my phone number for each of the Visa branded cards that I have. They're my bank issues, so my credit card and my debit card are both Visa. So anyway, it seems like everyone's trying to get at your transactions to sell you more crap.
Yeah. And they say that one of the pushbacks is like, well, they anonymize the data so it doesn't get out there. But
Anonymize, schmominize.
Yeah, so researchers have been able, in some cases, to de-anonymize and identify people.
Of course.
And maybe even just to a close geography or something. But and then break that process so it's you can be identified and tracked.
Yep.
There's always some other connections they can nail you down to. That won't be the only source of their data. They'll have other things, your cell data or whatever, and then they'll be able to identify you, and then a Russian will blackmail you for something, and there you go.
It's
all good.
It's utopia, people. It's utopia.
Yeah. I think it's funny that the kind of the consumer angle too, kind of encouraging these negative habits, from your bank.
Yeah.
Or encouraging you to buy all this stuff, and then this is your bank just supposed to say save.
It's the same way in which YouTube will not give you recommendations based on what you watch, and it kind of becomes more extreme the more you watch
Right,
it. So,
yeah.
Right? If you're
That's a
like
good
into
example.
whatever like men's rights nonsense, you get more of that when you log in. They kind of fall into a deeper rabbit hole. So yeah.
What is that called? That word incel.
Yeah.
Incel, right?
Exactly.
Is that it?
All that and men's rights, incel, pickup artists, all that troublesome internet culture stuff.
Yeah. Well, I'm going to read you the last line from this article because it's, basically sums it up pretty well. Is they are basically digging deep into your psyche and figuring out how to manipulate you.
Perfect.
From your local trusted bank.
Love it.
But is there an alternative?
Some people would argue that maybe you should go to a credit union.
Credit union?
Doesn't that sound nice? Sounds warm and fuzzy. It's like a local thing. You have to be part of a group to actually join, either a geographic or by profession or other. But
what wasn't it's a building and loan in It's a Wonderful Life?
It's exactly, yeah.
We're going to throw in holiday references more and more.
Let's do it.
As we get closer.
So this is a really fascinating article from today's Wall Street Journal that kind of highlights how credit unions have really become a lot more aggressive and risk-taking in their endeavors, and I see no way this could blow up. No way whatsoever.
It's a deregulation. At the
exactly.
root of it all. Yeah.
Yeah. Exactly. Yeah.
Yeah. This article does sound a lot like it could have been written in 1986 about the savings and loans.
So this article highlights how a lot of smaller credit unions have both increased in size and purview, and have again taken on a lot more risky assets and loans. So famously, if you noticed this a few weeks ago, Google actually Google announced their bank partnerships with both a big bank, I think it's Citi, but also a small credit union, right? So there's a lot of stuff going on in the space. And just for context here, let's give you sort of the metrics of what's going on in the credit union space. So credit unions now make up a third of U.S. auto loans, and that's up from 22% only 6 years ago.
The large banks have been pulling back from the auto lending business.
They have.
And I thought it was just smaller finance companies that were taking these larger risks.
No,
but
it's
the credit unions.
It's the credit unions.
Are part of that. Huh?
Yeah, so they're getting into the more the auto loan space, where in some cases they will lend you more money than the car is worth, so you end up owing more than the car is worth, which happens all the time.
That's been specifically pointed out as a risky area or declining credit quality area by the Federal Reserve.
Yeah, you usually think of a credit union as this kind of small, maybe 2 or 3 locations, very localized place.
The money's in your house, Bill, and
exactly.
in your house.
Exactly.
It's not here.
Yeah, because they have a different structure where the members actually own the credit union, thus the name, right? But if you live in Sacramento, you might have noticed that the arena where where the Kings play is named after a credit union. It's not the Wells Fargo Arena or the Chase Arena. Yeah. It's a credit union arena.
So it used to be where you had to be a member of a company or an area or something.
Or former military or something, yeah.
Right, for a specific group. And they could be they were the only ones that could be members there. But the deregulation we were mentioning is that there's been a loosening of those rules.
Anybody
so they
can
go out. Yeah, they can go out and market to anybody, and they can be part of it now.
Yeah,
and it's the big agency issue, right? Do you take risk with other people's money? If you win, I win. If we lose, you lose.
You lose, exactly.
As a taxpayer.
Yeah, and there's a pretty amazing...
And we can say that because it's happened so many times
because that's just
lately.
That's just capitalism for sure.
Yeah.
There's a really fascinating chart here that highlights the change in assets over the past decade every quarter from 2009 all the way to Q3 19. And essentially, credit unions have increased their assets 70%. Now, the same number for the big banks is only 38% or so. So there's a huge gulf. So I think that a lot of that is based on the fact that people have actually want to move off the big banks and go to the credit unions, which makes sense.
Well, they offer better rates, right?
They offer
Some
better
of the
rates.
examples were like, oh, this guy got a boat loan for 5%?
Yeah.
That seems like maybe it's underpricing the risk on something.
I think it may be.
Like
but again, it's all...
But we're going to see in the next downturn.
Who's holding the bag?
Yeah, right.
Yeah. So, yeah, they do have the better rates, but I think there's also a movement to kind of, ditch your big Wall Street bank. Like, who wants to bank with the Wells Fargo or Chase anymore, right? You want to go to a local mom and pop fuzzy credit union, but they've actually increased their assets. They were getting a lot riskier, and they're getting into other areas. They could actually end up blowing up the economy.
Yeah, I saw it. It's not just boats. They're like one of the leading lenders for recreational vehicles and all these kind of extra things that are not key. That may be the first payment that you drop.
That's right.
Since it's not vital to get to work like your primary car or something like that.
Yeah, indeed. And we'll dig into this later on in the final bite, but actually I'll leave you with this final number. As of the last quarter of 2019, Q3 19, credit unions have made a total of $1 trillion in loans. And that's up from a little bit over $500 billion 10 years ago.
All right, now it's time for our final bite, where we take a look at a big number and look at the story behind it. I'll start with the biggest number we've ever had.
Ooh.
Is that true?
Is it
It might be true.
quintillions?
Quintillions? No. So it's a $10 trillion, and that's the amount of U.S. corporate debt outstanding. So it's a new record. It's huge. I thought it was. I thought it would be much smaller than that. I mean, I've heard about corporate debts going up in some of the articles, kind of like these things here and there. But there's more articles about those flashy big numbers of cash being held by large corporations. Like Apple's always
right. They have
getting
cash reserves,
over $100 billion, and most of it held overseas still, I think.
Of course, yeah. In
Ireland
or something.
Yeah, but the debt has also been racking up at the more cash poor large corporate companies, and this includes these famous common names like AT&T, Ford, and CVS. They point out in this article in the Washington Post as having borrowed a lot of money recently. And
so what's driving this? Is it a matter of very low, very favorable borrowing climate now with very low interest rates?
Right, yeah, exactly. Not just in the U.S., the Federal Reserve, but central bankers around the world have very low and in some cases negative interest rates. which kind of was driven after the financial crisis to encourage investment and these companies to recover and the economies to recover. But as we know, when there's rates are too low for too long, it creates these bubbles and borrowing for investments that are more risky and may not have a great payoff. Yeah, that's just said that. Zombie companies. I like that one. So some of these companies keep borrowing and borrowing money, and we've heard about like a lot of zombie companies, like in China, where they just don't want to shut them down, like state-owned enterprises before. But that's also in around the world. This might be more common than I had been aware of. That these zombie companies can borrow at close to zero and keep things going even when they're not very efficient. So that's one of the drawbacks of having low interest rates is the most efficient producers don't actually are weakened because these zombie companies, these less efficient producers are selling cheap and just barely surviving and kind of weakening the market overall. So an otherwise stronger player finds it harder to kill off the competition
because they just have to. They can borrow and keep the business afloat.
Like a zombie, they just keep coming and
coming at you. Yeah,
you can't just shut them down, even though you've built the better mousetrap.
Good number, John. Thank you. My number is slightly smaller, but it's still pretty big. It's 25.
Impress me.
Yeah, I shall do my best. It's $25 billion, which is the number that Goldman Sachs is trying desperately not to enter into in the UK. So they launched Marcus, their sort of online, personal loan app as
millennial hipster brand.
Sure, yeah, awesome name, cool app, Clarity Money, all this stuff. And if they actually were quite successful. I think they had something like 300,000 signups in the first few months of launch in the UK. But they've become so successful that if they exceed $25 billion in assets in the UK, they will be subject to additional regulatory scrutiny, which means that they actually will have to separate their consumer business from the more risky investment banking business and have more of a real Chinese firewall. So they're actually trying now to kind of pump the brakes on this so they don't actually exceed that number.
They're getting close already.
They're getting pretty close, yeah. And it's a good time that they have a good product and they offered a good APY, but it means that if they get too successful, they
I hate when I succeed too much.
I know, you exceed all expectations.
Such a hassle.
Yeah. It's such a hassle, yeah.
I have to pay taxes on all the gains.
I know.
It's horrible.
It is the worst. This is part of their whole strategy to come up with new ways to generate $5 billion in revenue by 2020. And I think they'll be able to do that. But again, it comes at the risk of, increased
But there's no expense goal along with that.
Exactly.
Right?
Yes.
Because the problem is they would have to build all this infrastructure and hire all these compliance
people, have the firewall, separate the business, maybe even drive some of the risk decisions from the investment banking side as well to become less risky. So they're trying to stay under that threshold of $25 billion.
So if you're in the UK and you're looking for a compliance job, you're cheering them to...
You're hoping that
Marcus, come on.
cross that, yeah.
A few more jobs here.
You can do it.
Yeah. All right, interesting. Well, that's it for this episode of the FinTech Newscast. Please hit subscribe to keep up with these and the latest in FinTech news, and we'll see you next week.
Ciao, ciao.